good day, and welcome to another episode of Financial Behavior, hosted by Marcus Fryer here with Fryer Financial. Today, we are going to look at a recap of November and the market and kind of try and get ahead of what to expect for 2025 as we go forward. So, as we look at market performance from November, the major stock indexes were all up. Dow Jones, technology, as well as the S&P 500 were all up over 5%. So it's a really good month as far as that goes. Fed action, we had the rate cuts of 25 basis points. So the economy feels a little bit better about that we do have inflation kind of headed in the right direction. The projection for December, there's a 66% chance that the Feds will cut rates another 25 basis points. But, we're not really sure. So there's another segment out there that's saying that a third of us thinking there might not be a rate cut, just depending upon market data. The Feds are really kind of honed in on the economic data that they're receiving, especially with the jobs market. So the jobs market had a little bit of a falter in November as well. It's a little bit cooler than expected, mostly because of the hurricanes. Helene and Milton really impacted the job growth in the southeastern part of the country. So that was kind of a detriment to the jobs. And so when the Fed sees that, they kind of back off a little bit. Inflation is about where we want it. The consumer price index was up a little bit, as well as the product price index, just barely, 0.2%. So nothing really shocking there. For the most part, inflation is in line with the expectations, but we still do have some concerns about perhaps some rising prices in the future. And of course, the housing market continues to lead the way with those concerns as prices are elevated, mortgage rates are still high, making housing largely unaffordable for, the majority of Americans, or, a good portion of Americans are still struggling to figure out how to acquire that home. Let's see. Also, consumer confidence is at an all-time high from, let's see, dating back to July. So we have the kind of highest consumer confidence since July of this year. And that was indicated by Black Friday sales. Black Friday and retail sales are up, and Black Friday in particular, sales were up 3.4% over last year. So quite a bit of movement there in the consumer propping up the economy as it normally does. As we get to the end of the year, it's a good time we still have 21 days for the end of the year. So it's a good time to look at your portfolios and consider some tax loss harvesting. By that, we mean if you have some winners and some losers, it may be a good time to sell those positions in your portfolio that creates losses. And if you have some gains that you want to take as well, maybe the combination of those two can net you some cash that you either can use or reposition into some other assets that you're looking at purchasing without creating a tax issue, a tax event. So that's one thing we're looking at. We are also advocating long-term investing. The good chance that equities will continue to perform, although I'm using the term cautious optimism. And because last year, when I take a look at sectors, the defensive sector really led the way. So utilities and things such as that outperformed both the financial sector and the technology sector. So, as we're looking and, trying to evaluate market conditions, probably a more defensive position, again, with those utilities may be the way to go until some things kind of clear up. The technology sector is going to be more in line with how the economy performs. So it's going to be more up and down versus relying on that defensive utility and consumer spending to prop up your portfolio. So cautious optimism as we go forward into 2025, keeping an eye on volatility indexes, how people are feeling about the market to give us some clue as to when we may need to pull back, perhaps go to cash just to, save that performance. So as we go into 2025, that's what we're looking at. Cautious optimism. Be sure to catch the next episode at the end of the year where we'll unpack a few other things, most notably some financial behavior concepts as we go into 2025 and look to improve the way we manage our finances and just look at how we become successful going forward. All right, that's another episode. Talk to y'all next time. Take care.